Good morning, children. Hope you're all doing well. We'll be starting with our session 6. We have already started the chapter of fundamentals, and we will continue this chapter, the theory portion, today also in this session. Because this chapter you have already studied in class 11 business studies, so we did a recap and review questions which I requested you to look in your business studies textbooks of class 11. I have some more questions for you to do a little recap, which includes the portion that we had studied yesterday. I hope you are all maintaining your registers well. Please maintain them date-wise, neatly. Keep the margins properly, rule off, put finishing lines, and neatly do your work. What is firm's name? Does partnership firm has a legal entity? What is the status of partnership firm from an accounting point of view? What is the minimum number of partners a firm should have? What is the rate of interest that the partner has right to ask the firm on loan given by him to the firm? Who is a sleeping partner? Is interest on partner's loan charged against profit? Is interest on partner's capital charged against profit? How are the profits shared amongst partners in case partnership deed is silent for the same? Kajal, Neeraj and Anisha are partners and they decide to admit Padma, their landlord, as a partner. Padma brings her sufficient amount of capital and goodwill. The accountant of the firm passes the journal entry of rent paid to Padma for the office building through profit and loss appropriation account. Is the accountant correct in doing so? Give reason to support your answer. Children, I am repeating again that the review questions and the recap questions are supposed to be done in your registers in a very neat and systematic manner. The register is supposed to be maintained daily. Let's recap what we did in the last session. In the last session, we did talk about profit and loss appropriation account, which has two sides, debit and credit. The net profit or net loss that we get from profit and loss account is transferred to this account. Any amount that is received from the partner is credited. Any amount that is supposed to be paid to the partner in form of interest on capital, salary, commission, profit is supposed to be shown on the debit side. Also, if all the partners want to set aside a portion of profit for reserve, that is also an appropriation of profit. That is also shown on the debit side of the same account. And the profit that we get from this account is transferred to the capital accounts of the respective partners. Okay. When we talk of maintaining partnership accounts of a partnership firm, we talk of two methods. fixed capital account method and fluctuating capital account method. Because partnership has more than one owner, capital account is maintained for each partner. Now, we'll study about both the methods today in this session. We'll first talk about fixed capital account method, how capital accounts are maintained, and what is this method all about. In fixed capital account method, we have word fixed capital and account. So when we talk of fixed capital, it means capital that is invested by the partner. And this capital remains unaltered unless partner introduces further capital or withdraws from his capital, which is definitely like once in 3 years, 4 years, 5 years. It's not of recurring nature. So actually this capital that the partner initially invests remains unaltered. So in such a case, we maintain two kinds of accounts. One is called capital account and one is called current account. Okay, children. So what is capital account? Capital account of each partner continues to show balance year after year and only changes when capital is introduced or is withdrawn. And this account always have a credit balance. So if additional capital is introduced, then the capital account will be credited. If there is withdrawal of capital, it will be debited, and the closing balance will be on the debit side, which will be taken on the credit side once we brought it down to the next date. Partner's current account is also maintained, and it records all the transactions other than transactions of capital, such as drawings. Now which drawings are recorded here? Drawings which are made out of profit, interest allowed on capital, interest charged on drawings, salary, commission, profit or loss that comes from the P&L appropriation account. They all form part of partner's current account if the partnership firm is following fixed capital account method. In fixed capital account method, partner's capital account is only changed by capital introduced or capital withdrawn, and whatever other adjustments are to be made, they are made in the partner's current account. Now this current account, as we are seeing, it has opening balances on the credit side also and on the debit side also. So it can have balance of either type. Also in closing balance also, it can have a debit balance or a credit balance. Debit balance means the partner is supposed to pay to the firm, and credit balance means that the firm is supposed to pay to the partner. So credit capital account or credit current account shows that it's a liability for the firm, and debit balance of partner's current account shows that the partner is supposed to pay an amount to the partnership firm. So capital account will always have a credit balance. Closing balance of capital account will be shown on the liability side of the balance sheet. And when we talk of current account, it may have a debit balance or it may have a credit balance. Debit balance of current account will be shown on the asset side of the balance sheet, and credit balance of the current account of the partner will be shown on the liability side of the balance sheet. We'll study method 2, which is fluctuating capital account method. In fluctuating capital account method, children, only one capital account is maintained. All transactions relating to the partner are shown in capital account. That is the reason why the balance of such a capital account is always fluctuating. If the account shows a credit balance, it forms place in the liability side of the balance sheet. And if the account has debit balance, it will find its place on the asset side of the balance sheet at the end of the accounting year. This is the partner's capital account, which is maintained in case of fluctuating capital account method. Only this account is maintained. One account is maintained, and in this account, whatever balance of capital is available with the partners is shown on the credit side. If we are paying them interest, it will be added to their capitals. If they are bringing in fresh capital, further capital, it will add into their capitals. It will be shown on the credit side of the capital accounts. Any salary or commission that is paid to a partner will be shown on the credit side. Profit that will be transferred from the profit and loss appropriation account will also increase the capital of the partner. It will be shown on the credit side. What will be shown on the debit side? Drawings that are made by the partner, it will be shown on the debit side. Any interest that is paid by the partner to the firm on drawings that he has made, it will be debited. Debit item means that they are reducing the amount of capital. If there is a loss that is getting transferred from P&L appropriation account, that will also be debited. The closing balance mostly is credit. That means it is actually, when we take out the closing balancing figure, it will be shown on the debit side, and once it is brought down, it will be a credit entry, but it may have a debit balance also. That is also possible. So all the entries that are shown on the credit side of the partner's capital account actually are increasing the capital of the partner. They are adding it to it. And all the items that are shown on the debit side of the partner's capital account reduces the liability of the firm towards partner through capital account. Children, I want you to do these formats in the very systematic and neat and clean manner. We'll talk of the difference between fixed capital and fluctuating capital. When we maintain our accounts on the basis of fixed capital method, two accounts are maintained for each partner, capital account and current account. And in fluctuating capital method, only one account, that is capital account, is maintained for the partner. When we talk of change in capital, the amount of capital normally remains unchanged except when additional capital is introduced or capital is withdrawn permanently by the partner in case of fixed capital method. In case of fluctuating capital method, the amount of capital changes from period to period. Every accounting period there is going to be some or the other adjustment. May it be related to interest on capital, interest on drawings, profit from P&L appropriation account, or any salary or commission that is due from the firm to the partner. So all these changes are going to take in capital account only. So in fluctuating capital method, the amount of capital keeps on changing. Third point is closing balance. Capital account always shows a credit balance, but current account may show either debit or credit balance. In case of fluctuating capital method, capital account generally shows credit balance. It may also show a debit balance. The probability is there. It can have a debit balance or a credit balance. When we talk of fixed capital method, the adjustments relating to interest on capital, interest on drawings, salary, commission, share of profit or loss that is transferred from P&L appropriation account for the partner are all done in the current account, leaving the capital account unaltered. All the adjustments relating to interest on capital, drawings, interest on drawings, salary, commission, share of profit or loss are done in the capital account, since that's the only account that is maintained in the fluctuating capital method. We'll talk of difference between capital account that is maintained in both the methods and current account. Capital account is maintained in both the methods. What are the two methods? First is fixed capital account method and fluctuating capital account method. In both the methods, capital account is maintained. But current account is not made in case of fluctuating capital method. Sorry, there's an error. It's not made in case of fluctuating capital method. Capital account always have a credit balance and current account may have a debit balance, may not have a credit balance. Capital account balance remains unchanged year after year unless further capital or drawing is made. Balance of current account does not change with the introduction or withdrawal of capital. Capital account records amount invested by the partner and current account records salary, commission, interest on capital, profit, loss, interest on drawings, etc. Okay, children, we'll do our recap questions and we will move very slowly, and I want you to do them neatly in your registers. Name the accounts which are to be maintained for the partners when capitals are fixed. What is meant by fixed capital of a partner? Give two items that appear on the debit side of partner's current account. What is meant by fluctuating capital of a partner? Distinguish between fixed and fluctuating capital on the basis of closing balance. Where do we record interest on drawings in case capital is fixed? State difference between fixed and fluctuating capital on the basis of number of accounts maintained. Satish and Meetu are partners of a firm. They want to admit Jay and Anshali in their partnership firm. List the categories of individuals other than minors who cannot be admitted by Satish and Meetu. In absence of partnership deed, is interest on capital allowed to the partner? Will rent paid to partner be shown in the profit and loss appropriation account? Where will salary paid to the partner be recorded in case of fixed and fluctuating capital method? Which accounts are opened if the organization is following fluctuating capital method? Is interest on capital a capital payment? Children, please write the differences. Maintain the accounts that are supposed to be maintained in the fixed capital account method and fluctuating capital account method properly. If you have any doubt, please leave your doubt in the comment section below. I'll quickly do a recap of what we have studied today. We did talk about maintaining of partners capital account, and that is done by fixed capital account method and fluctuating capital account method. When we talk of fixed capital account method, we talk of two accounts, that is capital account and current account. In capital account, credit is made when further capital is introduced and debit is made when drawings against capital is done. In current account, debit is done when drawings against the profit are done, interest on drawings, and share of loss from the profit and loss appropriation account is there. Credit is done when we are supposed to give remuneration with respect to salary, commission, interest on capital to the partner, or share of profit that is transferred from the profit and loss appropriation account. When we maintain partners capital account according to fluctuating capital accounts method, only one capital account is maintained. Credit is when further capital is introduced with interest on capital, share of profit transferred from profit and loss appropriation account, or when we give remuneration like salary, commission to the partner. Debit is given in case of capital account, which is maintained in fluctuating capital account method when drawings against capital is made, drawings against profit is made, when interest on drawings is supposed to be paid by the partner to the firm, or when we transfer share of loss from profit and loss appropriation account for the partner. Please maintain your registers, children. Hope you enjoyed your session. We'll meet tomorrow with the new chapter as we are done with the theory portion of chapter 2 from volume 1 of Accounting for Partnership Firms Fundamentals. Thank you, children.